Welcome to Strategy Saturday. I'm Charles Carillo, and today we're breaking down how to analyze rental demand like a professional real estate investor before you buy. So let's get started. So it's essential to analyze the rental demand in the local market before purchasing a property, a multifamily property more specifically. And when I say local market, I'm referring to the specific neighborhoods within the market you are interested in investing in, since real estate is hyper-local. Now, rents at two properties just a few blocks apart could differ significantly. And by understanding the local market, investors can better position themselves for success. So what are the core principles of rental demand? So number one is population growth. More people means more demand for housing. Number two is job growth. A diverse job market with larger employers and new employers moving in will attract more people and more renters. I really don't want to see one of those employers over 20%, and I really don't want to see one of those industries really over 20% either. Number three is affordability of home ownership. Now, if the average cost of a house in your area is $300,000 and you are purchasing apartments for, say, $100,000 each, there's a large delta that renters need to overcome to become homeowners. The closer the numbers, the more competition you as a landlord will have from tenants purchasing instead of renting. Number four is income levels. Now, I always look at income as it's broken down throughout a city. It helps you decipher where the neighborhoods change and which gives you more context when looking at properties for rent. Obviously, if we are looking at a property for rent in an area where rents are $1,000 a month and you're saying, well, we're going to go to $1,500 a month with this unit, but then I look at the income in this area is $2,500 or $30,000 a year, you're not going to have people in that area be able to afford those properties. Now, if you say you want to bring people in, stuff like this, that's a whole different ballgame. It takes many more years. You can't just have people moving into an area. You can't rent to the tenants there. And that's the whole thing that gets you really behind what you're trying to do. So number five, going further, is the supply and absorption of new rental units. And how many new rental units have come on the market? And what is the absorption rate? And how many units are being currently constructed? So these three things, they might be overlooked by some investors. Some people might just look at new rental units coming on and not look at the other two. And then they might look at new units coming on and the absorption rate and not look at how many units are being constructed. So what's in the pipeline? The other thing too is we're going to go one step further. Number six is vacancy rate. And what is the market's vacancy rate for new and existing rental units? So we're going back to what we were doing with those ones in construction. If you're buying properties built in the 60s or 70s or 80s, you're going to have, as you get further away into older properties from new construction, that new construction is going to be less really enticing unless there's so much new product out there that people are pretty much giving away the apartments for the first couple of years or something like this. That's going to entice some tenants from moving up into them. You have like B going into A and C going into B, and wherever you are in that process, you'll see some renters maybe move. However, if you're seeing that maybe in your kind of target unit and classes of properties, there's a low vacancy, but maybe in the nicer properties, there's a higher vacancy. Well, that's something that shows you that you might not be affected for what your business plan is. It's always, though, you want to keep an eye on it and what is currently being constructed, because at some point, when so much comes on the market, no matter how many years old or how many classes down from A that you're kind of working in, you're going to have some effect on what's happening. It's going to affect your business plan and kind of your strategy altogether. Now, number seven, last one, is crime rate. So which direction has the crime rate been going over the past 20 years? And I always say this is like the inverse of population. So with population, we want to see it trickling up over, say, 20 years. I always do 20 years. You don't want to do like 5 years or something like this. Crime rate is where people also can kind of start fudging stuff, and I'll explain that in 1 second. But with crime rate, we want to see it evenly ticking down. Okay, over 20 years. If you look at a short period, people can manipulate that, because if, say, a new mayor comes in or a new police chief and they really start cracking down, so people get arrested, right? And they're incarcerated and all this type of stuff. And then what happens is that they don't see before and they don't see after kind of what's going to happen. If you go over 20 years and you see crime consistently decreasing, that shows that not only they have been tough on crime, but it's also they've been investing in other parts like healthcare and education in that area as well. You cannot maintain a crime rate so low or a declining one for 20 years or so, right? And obviously there's ticks up and stuff like this. That's what we're doing over 20 years. But without investing into other parts of the community, which makes that difference. And that's something as an investor they might not look at. You might look at crime rate from like the last 5 years and be like, oh, it's on its way down. But the thing though is if you look over 20 years, like, whoa, we had some huge spikes in what was going on here. That's a little bit of a red flag. Not that you're not going to invest there for sure, but you have to know kind of which way and direction the community is going at that point. But if you look over 20 years, you see that it's going the right direction. Now, here are some tactics now when we're going into kind of rental demand and determining market rents. And I combine these 2 points because they are crucial to understanding a market and underwriting a property, which is really what we're getting to. Now, it's also easier to confirm confirm the rental demand of a property or a market when you have a subject property at hand. So if you've been looking at a property, if you're underwriting a property currently, you could use this property or randomly choose a property on the market in your target market that works. So first off, we're going to do what every other investor or person looking to buy a property would do. We're going to enter that property's address on a few different websites, but we're going to utilize maybe apartments.com, RentBits, Rent-A-Meter, and Zillow. And I want to check around the property's immediate area and see what else is for rent. And make note of these properties if it's going to be from a mom and pop or it's going to be from a professional agent or property management firm that's listing them too. These are things you want to kind of know. You're going to have property managers that are probably going to be more likely to kind of push that rent, and you'll probably have people, mom and pops, that might not push it as far. And that could change, but usually the property manager is kind of oh, I rented one over here for $1,300, and they have another tenant or another unit that comes up from, and they put up there, let's see if we can get $1,320. Whereas with a mom and pop, they might say it's renting for $1,100, and when I renew it, new tenant comes in, maybe I'll put it $1,150 or something like this, right? Or maybe I'll just put it $1,100 and easily rent it to a good tenant. So you want to make sure that when you start finding these comparable properties and recording them, you want to make sure that they're apples to apples. And this is super important because the vintages have to be similar, and the size of the property and the types of amenities, if any, are similar as well. And if you're considering buying a 6-unit apartment complex, I would try to find comparable properties in a range of 2 to 20 units, because you're not going to have really amenities for those properties, and that's kind of what you're doing. And also the living situation is going to be similar. So I would much rather take a comparable from a quadplex versus a 100-unit complex if I had a duplex to rent, right? Because there's people that I'm living in an apartment, or what I'm going to do is I'm going to live in a small rental house. There's a different experience they're going to have with minimal tenants, easier in and out of the property, usually parking, and there's not elevators and stuff like this. So you keep those two things as a true comparable. And I would also review larger properties and single family homes to see what they go for, but you want to find accurate comparables on which to base your underwriting. And why I would look, as I just kind of went back on what I was saying, I just kind of want to see, because if I have a 2-bedroom, 2-bath unit, and then I start seeing apartments, and so mine in a duplex, I'm trying to get $1,400, but people are renting the same thing and they're renting it for $1,300 in a apartment complex. You know what I mean? Maybe that's pushing what it is. I'll see it. Maybe people pay this $100 additional every month for having, being in a duplex versus being in an apartment complex. I'm not sure, but it's also something to be aware of. Versus at the same time, maybe somebody says I can rent a single family house for $1,600. So I'm renting, one half of a duplex for $1,300, or I rent my own house for $1,600. That's also another thing that you really have to be, weary of what people are looking at when they're going through. Because you have some people that are we're going to rent an apartment, right? But then people start poking around. They might say, well, I can actually rent this side of a duplex, or I can rent in this different area over here. It looks like rents have come down, or I can rent my own house. So you just have to be aware of everything. But when you're really basing on doing your underwriting, we are really focusing on very similar properties to what the subject property is. So going one step further, what is the condition of the units for rent? So how does their condition differ from the subject property? What is the difference in rents? How many similar units are you finding? How close are they to the subject property? How long have the listings been live? And are they offering any concessions or move-in deals? So one of the things is that with rentals, they usually don't last that long, but it's one thing, a little trick real estate agents do. They'll take the property off, they'll put it back on, all this kind of stuff like this. So it shows that it's just a new listing, but really it hasn't sold 4 times before they listed it. But the thing is with rentals, I kind of want to see how long it's been on. Professional management company, or it's a large apartment complex, it's been on forever because they're always renting units. They consistently want incoming rents. If you're looking at something like a half of a duplex for rent and it's been up there for 3 months, I don't know if that's really a strong comparable. You know what I mean? I want to look at, see what stuff's going on there, give a call and ask them what's going on, you are a renter too, and see kind of what feedback they're saying, see how they kind of just what they say and how they ask questions to you and what they're looking for, and their whole demeanor of what's going on, because this is what people that are looking to buy or rent in your subject property, what they're going to be going for as well. Next I could do is you can place a rental ad, say on Craigslist. You can probably also do it on Zillow, but on Craigslist or other markets out there for a renovated version of the subject property that you're looking at, and see how many inquiries you get. And this will immediately tell you the rental demand, and you can do this from the beginning. However, we don't just want to know the rental demand. We want to know the rental demand for the renovated unit at the market rent that you're shooting for. So if you have units right now, you put them up there, they're dated, unit hasn't been updated in 20 years, and you're going to get, let's just say $1,000 a month for this property. Now you see some other ones that are up there and they're like $1,350, something like this, that are renovated. It looks like someone put $5,000-$10,000 into them that look really nice. And you're like, okay, that's what I really want to do. Take some pictures of that property, of those finishes, and put them in your rental listing and see if on this street, if here, how many calls I'm getting for this updated unit for $1,350. And that's going to immediately tell you what you're doing. And literally, when we used to own C-class properties and stuff like this, we would put up an ad on Craigslist and Zillow, and we'd get 50 plus inquiries within 2 days. You would just get flooded every 20 minutes during the day. You'd be getting new inquiries coming in. And I remember we had an agent that would rent them for us, and we would just pay him like $250 to rent the apartments. I would have a list of properties, a list of tenants to work through, and he would just be like, all right, everybody comes here at 5, everybody comes here at 7, whatever it is, however his process was that it worked for him. But he never had a lacking of inquiries. And the type of rental demand will ensure you can rent the unit to good tenants after renovating. So the more calls you have, the more people you can pick through and find that perfect tenant for your property. It's like when I speak to private lenders and, if they speak to 2 people wanting to get a loan every month, it's difficult because they're trying to make every one of those loans work, right? Probably not great loans though, maybe. Whereas if they had 20 people calling them every month and they want to do just 2 loans, at that point, they can really pick where they want to put their funds. And that's really where you want to be. You want to be able to pick and choose who's going to be best, who's going to be the best tenant there for your property, for your other tenants on property on the site, and also who's going to take care of paying rent on time and who's going to stay there for multiple years. And once you found this person, you can do that by having a lot of inquiries. Additionally, if you're already speaking with a property management company, ask them their thoughts on the current rents at the subject property, your proposed renovations, your budget, and future rents, and see what feedback they have. And I would trust the feedback from a property manager over that of other professionals like real estate agents, since the managers rent similar units daily in that market. I remember when I moved down to Florida and this one city, I was interested in buying properties and, buying rental properties. And I was talking to some property managers there. And, I was on the phone with this guy for 5-10 minutes. And then he tells me, he goes, we just really haven't made money in this market before or in this city. And right there, red flag. Out of a 10-minute call, I now know never to buy anything in that city. You know what I mean? Maybe until I review it or speak to someone else years down the road, whatever it is. But I know from my search today for buying rental properties, that city's out of it. I just had someone that's a professional in that market tell me that it's very difficult to make money in that market. You know what I mean? You might be enticed by low prices and all this other stuff, but the problem is that it's just maybe a difficult class and, clientele that your tenant base you're dealing with. Now, if you want to take this a step further, you can start calling some of the comparable properties and mystery shop them, which definitely if you're buying the first time in a market, I would do this, and speaking to leasing agents and see what types of specials they are offering and what else they're utilizing to entice new tenants. Free months of rent, no or minimal upfront deposits, waived fees, etc. And are they offering these deals on all units or just specific size units? Important information to take into consideration when looking for properties. And this is one thing, this is where investors can get tripped up a little bit when they're not looking at new inventory, because they might say, well, I'm buying B-class properties that are 25 years old. New stuff coming on the market's $2,500. The stuff I'm renting is $1,800. There's never going to be there's no touch there. This is $8,000-$9,000 a year difference. But when you might call up, and I've called before where they have different prices. So if you call up, seen before, okay, it says $2,500 on the website. What we're going to do is we're doing a special now. It's $2,250. We're going to give you a first month for free. We're going to give you a moving truck for free. We're going to give you a TV, all this stuff for free. And you're like, whoa, this is now, it's really getting close to what I'm offering for a brand new product. Yes, your tenants are most likely going to be experiencing that as well. So that could be an issue that starts making it more difficult to rent your units when you're just okay, just 12-month lease, $1,800. You know what I mean? So you have to know everything, even if it's for properties outside of your target asset class. And understanding the rental demand and market rents of a market will help you become a more informed investor, which will set you apart from other investors. Additionally, I always drive markets before looking at properties in an area or purchasing a property. With today's online tools, you can do a lot of your research up front, like I spoke about, but nothing can replace actually driving the streets of a neighborhood you're targeting. And it also surprises me how fast neighborhoods can change from one block to another. And your tenants will realize that too when they're coming to look at your property. So please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look forward to 2 more episodes next week. See you then. Have you always wanted to invest in real estate but didn't have the time, didn't know where to find the deals? couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars LLC exclusively.